Is ViacomCBS, ticker symbol VIAC, a good stock to buy in 2020? This is the question we're going to answer in today's video. I'm going to show you the pros and potential of VIAC, and I'm also going to share why it's potentially a risky investment in 2020. I'm going to share this information with you so that you can make a good and informed investing decision. And shout out to Jay, who asked me to review this stock on my channel. If you want to see any other stocks reviewed on the channel, make sure to let me know down in the comments below, and I'll be happy to get to it. And let's get right into the video. And before we get into the company's financials and how they're expected to perform, let's talk about their business model for a little bit, just so we're on the same page with it. So ViacomCBS makes their money through ad revenue. They own their own TV channels and they buy content for it, and they also produce their own content for their own TV channels. ViacomCBS owns big brands like Nick Jr., Comedy Central, and CBS Sports. Advertisers want to pay ViacomCBS to have their ads run on CBS's channels. And if we take a look at their stock chart, we can see that ViacomCBS is massively down. About a year ago, they were trading at about $50 per share, but now they're only at $17, which is just a dramatic fall. And in the recent weeks, a big reason that the stock has fallen has to do with the coronavirus. Initially, many people were thinking that ViacomCBS would do really well during this pandemic because a lot of people would be staying home and watching TV. That means the demand for advertisements would go up. However, the opposite has happened for CBS, and their ad rates have collapsed. According to this article, due to the lockdown in almost all major cities around the globe, major movie releases and shootings have been halted, which is not good news for the traditional media giant like ViacomCBS. The company's key revenue sources, like movie theaters, have come to a virtual halt due to the pandemic. So essentially what's happening is that movie theaters are no longer advertising their films because no one's going to watch movies because all the movie theaters are closed. Also, since movie theaters are closed, movies that were supposed to air out pretty soon are no longer advertising just because no one's going to be watching movies anytime soon. And movies are a key source of revenue for ViacomCBS. And they're going to lose a lot of money because movies and filmmakers are not advertising movies anymore. And to make it even worse, one of ViacomCBS's key sources of revenue was their CBS Sports network. Now, virtually all sports have come to a halt and all seasons are now pretty much at a halt. What this means is that ViacomCBS does not have any content to show on their TV networks. So that means they're not going to get any ad revenue at all, which is disastrous for the company. The coronavirus is really going to have a material impact on ViacomCBS. Right now on screen, I have a chart of ViacomCBS's expected earnings. And if we take a look at the second column, we can see Viacom's expected earnings for quarter 2 of this year. And we can see that Viacom's average expected earnings is 81 cents per share. And this is down significantly from last year during quarter 2, their year ago EPS, which was $1.16 in earnings per share. And what makes this even worse is that analysts are expecting a lot of downside with the stock. On the low estimate for quarter 2, it's only 18 cents in earnings per share. This is really low when you compare to 81 cents, which is the average expected earnings per share. Their profit for quarter 2 could potentially be only a fourth of what it's expected to be. It really indicates that there's so much uncertainty with this stock, and this shows that there's a lot of downside potential with their earnings as long as the coronavirus is still going on. What makes this stock even more risky is their long-term debt. On their balance sheet right now, they have $18 billion in long-term debt. $18 billion is a lot when you compare it to their ability to pay off debt. According to their income statement, last year, they had about $3 billion in net income. And when you compare that to the $18 billion in long-term debt, you see that's going to take many, many years for them to pay it off. especially when you consider that their earnings are going to go down significantly this year. So right now, they have so much long-term debt. When you look at their long-term debt to net income ratio, you usually don't want to see it higher than 3 or 4. But right now, it's at about 6. And it's actually higher than 6 because they're not going to have a lot of net income this year. So their long-term debt is actually looking really dangerous. And what makes the situation even worse is their interest expense. Last year, they had almost $1 billion in interest expense. And when you compare that to the last line on the income statement, EBITDA, which is earnings before interest, taxes, depreciation, and amortization, essentially their earnings before interest and some other stuff, you can see that their interest expense takes up a huge portion of their EBITDA. It takes up about 20% of their earnings before interest, taxes, depreciation, and amortization. It takes up about 20% of that last line on the income statement, and it indicates that they have way too much interest expense. It can really constrain their growth and their ability to stay profitable during these times, and it can really be a big strain on their cash flow. Overall, they do not have a strong balance sheet, which adds even more risk to the stock. What makes this stock potentially even more risky is their attempts to expand in the streaming market. ViacomCBS has a service called CBS All Access, which is a streaming service kind of like Netflix and Disney+. Right now, if you ask any of your friends what streaming service do they have, they'll probably either say Netflix or Disney+. Very rarely will someone say CBS All Access. It really just goes to show that CBS All Access is not very competitive when you compare it to the major competitors. So over the long term, I don't think they're going to be too successful with their initiatives to expand in the streaming market. So far I've been sharing with you some very big weaknesses with ViacomCBS. You may be wondering, why did you make a video on this? Does this stock have any potential? And I think that there is. And it all has to do with their valuation right now. What makes this stock really attractive is their valuation right now. Right now, their forward PE is at 3.6. And their price to earnings to growth ratio is 0.38. You never really see companies trading at such low PE ratios and such low valuations. You're rarely ever going to see the stock come down this low. However, it's really important to notice that this is a forward PE ratio. It's based on the earnings per share by the end of this year, and that earnings per share was calculated assuming that the economy will reopen during quarter 3 and during quarter 4. So it was calculated expecting that the earnings will go somewhat back to normal during Q3 and Q4. So this stock is at a really good valuation, assuming that the economy reopens during quarter 3 and quarter 4. However, if it doesn't reopen during that time frame, it can potentially be a really bad investment. So right now, the company appears to be at a good valuation, assuming that the economy reopens during Q3 and Q4. And will the economy reopen? Well, to be honest, no one really knows. Right now, we're seeing some moves to start to open up the economy. For example, according to this article, Texas is to loosen restrictions on malls, movie theaters, in a staggered reopening. So Texas right now is partially reopening its economy. However, for CBS to be successful, the economy needs to open up nationwide. And will that happen? I really don't know, and no one truly knows. So if you do invest in this company, it's going to be partially speculative, which makes it a pretty risky investment to a certain extent. However, I do feel like they do have a good dividend, which gives investors some amount of safety. Right now they have a dividend yield of 5%, which is pretty good, and they have a payout ratio of 25%. However, that payout ratio might not be too accurate, just because the company's earnings might fall dramatically more than they're currently expected to, depending on how the future unfolds, depending on where the economy opens up or not anytime soon. So that payout ratio could realistically be significantly higher. So there's a potential for a dividend cut within the next year if the economy doesn't reopen. However, they do consistently grow their dividend. Although it says they've been growing their dividend for only 1 year, If you take a look at their dividend history, they grow their dividends every couple of years or so. So you're not going to see a ton of dividend growth with this stock just because it's not consistent nor at a high growth rate. But they do have a very high yield at 5.65%, so their dividend is good. However, it's only good as long as their earnings don't fall too dramatically, and no one really knows how bad it's going to be. So do I think ViacomCBS overall is a good investment? Here's my verdict. Is ViacomCBS a good investment in 2020? I say that it's very risky. It all depends on whether the economy will reopen or not. There's some long-term risk given the weakness in their streaming service and the amount of debt they have. But if you are looking to invest in this stock, I would at least wait until their earnings come out so you can get a sense of how badly the coronavirus is impacting their earnings. But overall, I hope this video helped. Make sure to drop a like and subscribe down below. And make sure to check out my other videos over here on stocks that are potentially better investments than ViacomCBS.